Alright guys, so in this video I will be sharing with you a secret recipe that I use in the Forex market. So let me know if you are hearing me.
Alright guys,
Okay, sounds good. So this will also be recorded, for the community. So what I will be doing in this video is to share with you guys how I manage risk whenever I am taking a day trade. Alright, so you guys know the type of trading style that I use, which is price action, and whenever the market is in what we call a range, we have been consolidating in this area and we got a candle to break and close below structure. So, a signal was sent out to just risk a small percent of the profit we would have made this morning, with anticipation that leading up to the pre-London, we should get some form of continuation. Maybe back down to this support, or, if we can push down to this resistance here to TP1, we can secure some profit. But I'm going to share with you guys how I effectively cut losses short whenever I'm doing a day trade. Now, whenever you're doing a day trade, you're basically accepting the fact that if the market should push against you as you enter the trade, there's a high probability you might get stopped out. So the first scenario I'll be looking at is how to manage risk after the trade goes in profit. Alright? Now, the overall stop loss is 19.4 pip, which is roughly 20 pip. I took a sell here. Alright? How I am going to manage risk on this trade, if it push 10 pips in profit, which is about here, so I'm going to take a line and mark this area. If it pushes 10 pips in profit right here and pulls back to my entry, I'm going to close 50% of my position and leave the rest to run. The reason why I'm going to leave the rest to run is that I am okay risking whatever I'm risking on this trade, but at the same time, you have to manage risk whenever you enter a trade. So again, when I am taking a day trade and it pushed 10 pips in profit and pulls back to my entry, I'm going to close 50% of the position and leave the rest to run. Alright, my first take profit for a day trade is usually 15 pips. Alright, now, how you can play this? Take for example, you enter the sell and the market push 15 pips in profit. You have two options. One, you can secure 50% or more of your position. That's the first one. Alright. The second scenario, well, after you would have secured 50% of the position, you can move stop loss to entry. But whenever price breaks out of structure, it always creates a low. And most time, it will pull back to retest the area before you get a continuation. So in securing 50% or more, and move your stop loss to entry, there's a very high probability you might get stopped out. Alright, that is the first scenario. The second one is that you can secure 50% of your position at 15 pips and leave your stop loss in the original position, with anticipation that even if the market pulls back to retest the area, you are saying, okay, the trend is bearish, we break out of structure, so price should not close back in the range. Alright, so if price close back in the range at this point, you can say, okay, I'm going to close my trade now, seeing that we would have leave this area of consolidation, push down, create a low, and then price breaks and close back above support, back in the range. So even if you exit the trade at this point, you still would have been in some profit overall. Alright, so that's a second scenario. So again, if you secure 50% at 15 pips and you leave your stop loss in the original position, even if the market pulls back and hit your stop loss, you're going to lose a small percentage of what you risk overall based on your risk to reward ratio. So in this case, we would have lost about 4%. Well, 4 pips. We would have lost 4 pips in this case. The reason being is that we would have secured 50% at 15 pips and the market pulls back to negative 15 pips, which would put us at break even. You know, so if it push and hit our stop loss, hope this makes perfect sense to you guys. If it breaks this area and hit your stop loss, you would have lost about 3.8 pips overall at 50% of your overall risk. You know, so this is another concept I actually use to effectively manage risk whenever I'm taking a day trade in the Forex market. Alright, so again guys, if I enter the trade and it push 10 pips in profit and pulls back to my entry, close 50%, leave the rest to run. If it push 15 pips in profit, usually 15 pips is my take profit 1, secure 50% or more. Whenever you secure the 50%, you have 2 options. If you're looking for a longer term play, 50-60 pips or more, you can leave your stop loss in the original position, or you can move your stop loss to entry, but bear in mind there's a high probability the market will pull back to retest the area, hence you getting stopped out. Alright, so this is another concept that I actually use to manage risk in the Forex market, because risk management is very, very important. Alright, you have to have good risk management. So whenever I take a trade in the Forex market, I don't allow the market to hit my stop loss at max risk. Alright, so even if I enter a sell here and I find that price breaks and close back above the structure and start to pull back to about negative 50%, then at this point I'm gonna close some position just the same. Depends on how the candles are forming, because you want price to break structure and also stay below the level. You want price to stay below the level. So if it closes back above here, then this move down would become a fake out. And you don't really want to hold your entire position on a fake out, because the thing with fake out, whenever we close back in the range, there's a very high probability the market will push to the top of the range, hence you getting stopped out. Alright, so this is another concept I use in the when I am doing day trade in the Forex market. And this also goes for the volatility index as well. Alright, so guys, don't sleep on this video. Don't be the type of trader that will try to all trade for 100 pips and don't secure any profit. Alright, to me that's rubbish. 15 pips, you can secure some position whenever you are doing day trade and just leave the rest to run. Alright, because you want to take most of your position off the board. So if you want to secure 50, it is okay. I do that sometime. You know, but most time I secure more than 50% of my position. You know, so don't be greedy. 10, 15, 20 pips is sufficient in a trade. So don't look at the monetary gain. Instead, focus on pips gain. Alright? Because you have to remember that pips works along with your lot size. So as you grow your small account and your lot size get bigger, it simply means that, you know, 1 pip will value more. So at this point, if you're using $1 per pip, you're targeting 15 pips. So if you are going to secure 50% at 15 pips, that's about $800 to $900 right there. Alright? If you secure the entire position, you're looking at about almost $2,000 with just, you know, this 15 pip move. So you really have to take into consideration how you are going to manage risk in the Forex market. And you know, if you move up to $2 per pip, then at 15 pip you secure 50%, you're basically securing $50. Alright, because 2 times 15 is 30. So at 15 pip, if you secure 50%, 50% of your position, you're securing $15. All right, so don't focus on the monetary gain. Instead use PIP to calculate your target. All right, and gradually grow your small account. So this is another mistake trader usually makes in the forex market. They try to use small account and they try to hold trade for too long, and then the trade end up pulls against them, and then they lose the profit they would have made plus the money that they would have initially risked. So you don't want to fall into that category. So you don't need to be greedy. Just secure some position, and who knows? There's gonna always be another day. There's gonna always be another day, and you can always get another trade. Alright, so that is it from me to you. Just take it easy and try and implement this whenever you're doing day trade. It's pretty easy. You just need to get some practice on this, and once you become consistent, then you will see what I'm talking about. Alright, so I'm in a sell, and this was also sent in the premium group right here. You know, entry right here. Gave out the entry, the stop loss, take profit, one full take profit. You know, only risk a small percent of yesterday profit. And this is a day trade idea, and the stop loss overall is 20 pips. Alright. And if you look here, this was another signal sent this morning for a buy on GBP USD. You know, so this was the entry here. And as I can see, if price breaks the low of the previous candle here, close 50% of your position and leave the rest to run. Alright. Here we went up to 8 pips in profit, and then take profit one was it. You know, so overall take profit one took probably about 10 to 15 minutes at 13 pips, and we did get some continuation just the same, you know, up 20 pips, and you know, went up to 34 pips. But overall the move overall was GBP USD. The overall move was probably about 40 something pips from here to here. You know, 42 pips. So that was pretty good. Alright, and this was another idea I discussed with the premium group as well for potential sells if we start to break below structure right here, which we did. You know, so leading up to the London Open, if we can get that push, then definitely can hit support right here. Alright. Not trading this. This is just a paper trade on gold. This is just a paper trade for us to continue bullish. This was also done in the premium group. You know, just wait for price to break and close below support or above resistance, which it did right here. So I'm expecting some form of continuation. On this. You know, but for now, I am monitoring Euro USD. And I am not risking my entire profit I would have made yesterday. It's only a small portion of that profit for the market to continue to push bearish. Alright, so again guys, trading is very, very easy. It's simple once you understand everything. So one of the next video I will be doing is on psychology. Gonna be talking about psychology on the next live, hopefully. You know, so that you guys can have an idea how I go about dealing with loss and stuff like that. You know, but psychology is not something I can teach you. I can explain to you the different steps, but I think from my perspective, person need experience in the forex market to, you know, combat psychology. You need that experience. You have to have that experience in order for you to you know, get used to it, and you'll be able to better manage it as you go along your trading journey. Alright, so that's it for me guys. So I'll see you in the next series.